So, hey guys, how are you all doing today? I really hope that you all are doing very well. In today's video, I am going to be using the Fibonacci retracement tool, and I will show you exactly how to use the Fibonacci retracement in this specific way. But first, I am going to analyze the price action along with the support and resistance ranges, and only after doing that will I use this tool. Because I always give my first priority to support and resistance and technical analysis. So here too, I will do the exact same thing first, and only after that will I use any additional tool. So, as always, I feel that finding a chart with good movement is very important, because if I find a chart with good movement, I can mark support and resistance properly, and then I will be able to use any tool here properly. So I'm going to find a good chart here. So for a good movement, I will open and check different charts here. A chart with good movement should have acceleration, LSD acceleration, so that I can properly find support and resistance. This chart is moving a bit sideways, so I will change it here. I am currently trying to find some good charts right now. If I see any good chart, I will definitely try to apply my trading strategy there. Right here, I will first draw a horizontal line across the chart. This chart looks quite decent to me, so I will highlight the horizontal line a bit at the end so that it remains clearly visible for everyone. After that, I will place this level slightly above since the market is moving down from here. So I have placed this level right there. And on the lower side, this is the support level. I have marked it here. Now the support and resistance levels are set. I am not marking them with double lines because I am going to use a tool here. After that, I will use my Fibonacci retracement tool here. So I will go here and select this tool from here. I have made it yellow because the horizontal levels were already green. So I will adjust the lower level of the tool with the lower level and the horizontal line as well, and then I will adjust it to the upper side with this level. Okay, after that, I will find the 0.5 level here, which is called the golden zone. It is believed that the market often remains bullish from there, but it is not always certain. So here I will take a trade for 1 hour direction. From this level, the market has previously been bullish at two different points, which is why I have decided to take a trade here for the 1 hour direction. So I have placed 3 trades of $100 each in the upward direction. And please keep in mind, I am not a financial advisor. Before placing any trade, make sure to do your own research because trading is very risky. There can be losses here as well, so you should only trade after thorough research and proper money management. Otherwise, it is best if you avoid trading for the time being. So here, I am going to wait a bit longer until this current candle finally closes. And according to my own analysis, the market will likely try to remain bullish until it finds a solid resistance level. After that, it will test that level and then start to pull back. And finally, one of my trades here has been profitable and I am still waiting on the other 2 trades. Another trade of mine here has also turned profitable, and the last one, this trade has also become profitable for me here. Alright, so as you can see, I have drawn the support and resistance levels here quite effectively, and they worked out very well. So now, once again, I am going to try to find another chart that shows some really good price movement for us. And I'll see how well I can find a suitable trading chart. If there are prominent long wicks on the candlesticks, I'll be able to identify and plot key levels of support and resistance even better. So, I try to find a specific chart like this for my analysis. Otherwise, if I don't see any good partiality, or you could say if I don't find a good chart setup, then I will refrain from taking trades. But my first priority is to try to find a nautical chart. So this chart here is moving quite strongly in a trend. So I will steer clear of this particular chart and take a closer look at a different chart over here. None of the charts seem to have any significant price movement, expansion, or de-expansion. The vast majority of these charts are currently stuck in either a clear uptrend or a steady downtrend. This chart looks reasonably okay to me. Apart from that, I will try to draw some of my own levels here, because only if I can draw the levels properly will I feel confident that maybe I have identified a strong support or resistance. So on the upside, I have marked one resistance level, and on the downside, I will mark one support level. Now this entire area effectively becomes a trading zone, and within this specific zone, I am going to try to adjust my tool, which is the Fibonacci retracement. So I will take the tool from right over here, okay? I have changed its color because the holder levels were also yellow, so I made this one green so that it remains clearly visible. I have adjusted the lower level to the significant support level located right down here, and I will adjust the resistance level to the upper level above. Now, the levels in between get automatically calculated and adjusted systematically according to themselves. So here I see there is a zero point 0.5 level, and from there the market tends to be quite bullish, so I have adjusted it properly. Okay, now I will place a trade in the upward direction from here. So I have placed a $100 investment trade position in the upward direction, and from the zero point 0.5 level, the market has very often been bullish. You will have to wait here. I have no absolute guarantee that this trade will definitely win for me. It could also potentially be a loss, so I have to watch the movement accordingly. If any of my trades result in a loss, I will implement the standard martingale recovery step strategy, because in price action, I look at the overall market context to see whether the market movement is in an uptrend or a downtrend. I do not take trades based on just one particular candle, so here I will wait a little bit longer. Let the candle close first. So there are just a few seconds remaining here, and this trade has resulted in a loss for me. So now I have placed a double trade right here and followed the martingale step in the upward direction. Personally, I really feel that the 0.5 Fibonacci retracement level is widely considered to be a golden zone, and from that point, the market often tends to show some very bullish momentum. Consequently, both of the trades I placed today were right at that 0.5 level. Now let's see exactly how accurate this prediction turns out to be in the end. I will have to wait a little bit longer here, and the important thing is that you should always remember not to trade in the way you are seeing here. It is definitely not nearly as easy as it might first appear. And before placing any trade, it is very important to do your own thorough research, because having a loss in trading is not a big deal. It can happen very easily to anyone. So always make sure to trade with proper money management and risk management strategies in mind. So guys, my trade here is done for the day, and I did have one loss. No worries. I will again try to find a chart with good movement and look for a good opportunity. I have already told you that losses can happen, so we will proceed accordingly. It's just not possible to say with full certainty that there will be 100% profit. So now I will try to find a chart with good movement, where you can clearly see both the uptrend and the downtrend. Let me take a quick look at the EU-USD pair. From what I can see here, the market has turned a bit bullish within a sideways movement, so we'll expand our view on this chart. But I don't really see anything particularly special happening here either, so I'll switch over to a different currency pair. If I don't find a good opportunity to place a trade, then I am not going to do it, because there is investment involved here. There is always risk, so I will place trades here very thoughtfully. I have to manage my risk so that in trying to make one trade profitable, I don't end up making a loss somewhere else. So I will take one horizontal line here. I'll place one horizontal line on the upper side, which I consider as resistance because a pretty good bearish candle has formed from there. So I'm getting an indication that there are some sellers here. I'll copy this and place it on the lower side as well as support, because the market has been bullish from here and there must be some buyers here. At least the market movement is such that I think I will wait a little bit longer before making any final decisions here. And right here, I am going to use the Fibonacci retracement tool. So I will adjust it downwards with the lower level, and with the upper level, I have adjusted it upwards to 60. There is a strong downtrend here, and the market appears bearish even below the zero point 0.5 level, so I do not see any significant indication here to place a trade. That is why I will avoid trading here. And that is it, guys, for today's video. If you like the video, please make sure to give it a like. See you in the next video. Thank you.